My name's Andrew Stotz from Maybank Kim Eng, and today I want to talk to you about one of the stocks in my portfolio, PTT. Recently, I got a chance to sit down with the new CEO of the company, Dr. Pailin Chuchotawan. We spent some time going through a lot of his plans for the companies, and I can say he's a hard-charging guy, and I think he's going to push the company to continue to improve. Now, one of the things that we talked about in that interview was the idea that PTT jumped up in the Fortune Global 500 company list from about 130 to 95. They had expected that would come a few years later, but it actually came just recently. So what better time than to compare PTT relative to the other energy companies globally? So what I did is I looked at the Fortune Global 500 companies, and I saw that the energy sector was the largest component of the overall group of companies, followed by financials. Now the next chart is really interesting, and it's the key to this analysis. What you can see is oil price rising from bottom left to upper right. You can see another line, which is PTT's ROE, which has been falling just the opposite. And then you can see the global energy ROE. What's happened is that PTT's return on equity has been falling pretty substantially since it listed in 2001. Now we'll look into that in more detail just for a second, but I want to highlight something that normally we think that energy companies do really well when oil prices are high. But in fact, what you'll see is once oil price gets above about $65, ROE starts to suffer, and it hasn't recovered since that time. We're now at about a little bit under 20% ROE for the industry, and PTT is in line with its global peers. But why did PTT's returns fall over time? Well, let's look at it in more detail. We break it down in the DuPont analysis. We can see that PTT's asset utilization, that is, the revenue they generate relative to the assets that they have in place, is far above the other companies, and that means that it's not an area where they're struggling. Well, let's continue on and look at net margin, and this is the key. Now, an interesting statistic that you'll see on this is I actually have two bars. One is the listed energy companies that are privately owned, and the blue one is the state-owned energy companies. Now, you'd think that state-owned energy companies would be helping the people within their countries, but what we can see is they actually get a higher net margin than the private sector energy companies. But the key to PTT's struggles has been a fall in their net margin. Now, this fall has been offset by the asset turnover, and therefore what we saw was that PTT actually is in a situation of having ROE about in line with the industry average. Part of the pain came when PTT took on and bought TPI, which was a troubled debt many years ago, and they brought that into their balance sheet, which is now called IRPC. It's never produced a net margin that's above PTT, so it hasn't been value enhancing. If we look at the amount of leverage, what we'll see is that part of the fall in ROE is just the fact that the company has been deleveraging. The exceptionally high ROE at the earlier stages was because they had a lot of debt and very little equity. But a very profitable couple of years allowed them to rebuild their equity base as they were listed in the market. And so as that happened, they started to see that they got back down to normal. This was also a drag on the ROE over time. Now let's look at valuation for just a minute, and what we can see is one of my favorite ratios, which is the ROE divided by price to book. What this is looking at is the profitability of the company and how much I have to pay for that in price to book. If in this chart we can see, you could imagine a price to book of 1, and on the all the way to the left you'll see that in the case of BP, as an example, Gazprom's a little bit of an exceptional item, but in case of BP, it is cheapest, right? Because 1 in price to book will get you 13 in ROE. What we can see is that PTT is about in line with the average, so it's fairly priced at this point. Now, relative to global average, if we look at it on a PE basis, we're also about in line. Now, of course, what you can see is that profitability is in line with global average and valuation is in line with global average. So it's not a bad situation at all. The challenge will be, can the new CEO and president bring this up above global average? That's not easy when you're looking at companies like Chevron as an example that are very highly profitable and a high PE. Now, of course, our portfolio is in Thailand, so these are the stocks that we can choose amongst, which are the Thai energy stocks. And when we look at them on an ROE divided by price to book basis, we can see that PTT is still relatively cheap. Only thing cheaper is Bangchak, and I got that in our portfolio right now, right? So the last thing I would highlight is that price to book for PTT is now down about 1.3 times price to book. I think that's relatively low when we see, or let's say relatively cheap, when we see that ROE is relatively stable now compared to the past. So that sums up what I have to say about PTT this week. Thanks for listening.